Welcome to the M2I Alternative Investments Chat, where we demystify the world of alternative investments and financing for entrepreneurs and investors alike. With these discussions, we hope you're more empowered to unlock new opportunities in your business or portfolio. Hello, and welcome to another episode of M2I Alternative Investments Chat. We are your hosts, Erica and Aaron, and today we're going to dive into the foundational concepts of accredited and non-accredited investors. Understanding these categories is crucial for anyone interested in the world of investments. So let's get started. Aaron, tell me, how did the concept of accredited investor actually come around?
Yeah, so the first time that we hear the term accredited investor, that comes from the Securities Act of 1933. This is also called the Truth in Securities Law. This act came about after the stock market crash of 1929 and the Great Depression. Obviously, after that happened, we decided we need to make some changes. So it was implemented to regulate the issuance of securities and protect investors from fraudulent activities and market manipulation, which of course was part of the reason why the stock market crashed in the first place. So the purpose of developing this term, accredited investor, is to distinguish between investors who were deemed to have financial sophistication and resources to bear the risks associated with certain types of investments and those who did not.
Got it.
And the idea was to create exemptions or relax regulatory requirements or offerings made to accredited investors. And that's under the assumption that they're better equipped to deal with these risks, whether that's through financial knowledge or just having money and the resources to bounce back from potentially a loss. And the specific criteria for determining accredited investor status has evolved over time and may continue to evolve over time. And the Securities and Exchange Commission, the SEC, periodically updates and refines those definitions based on things that are changing or happening in the world.
Okay.
The current criteria for accredited investors is outlined in Rule 501 of Regulation D under the Securities Act of 1933, as amended, and can include various financial thresholds, professional qualifications, and institutional affiliations as well.
Got it. So let's just remind everybody what an accredited investor is, that definition. So again, it's an individual whose income exceeds $200,000 for the previous 2 years and the year in which they're investing, or $300,000 if you are filing with a spouse or partner. You have to have a net worth of $1 million, and that's going to exclude your primary residence. And then, like you mentioned, there are those certain professional certifications and credentials that can also pop you into that category. Some of those professional licenses are a Series 7s. So what that license is, it's a general securities representation. So it allows professionals to sell security. So if you can sell it, you can buy it, basically. Another one is a Series 65, and that's an investment advisor representation. Again, there's an exam and security licenses required by most of the United States for individuals to act as an investment advisor. Your advisor, if you're asking advice from them, they should be, again, you should have the knowledge to also invest.
Exactly.
And then there's that Series 82, which is a private securities offering representative. And it's for the sale of private securities as well. Again, if you have the knowledge to sell these, you should be able to participate in this. Again, falling in that category of accredited are those high net worth individuals with significant investment portfolios. And then lastly, this one's kind of a newer one, knowledgeable employees. So individuals who work at an entity offering non-registered investments. Again, if you can understand the concept of selling these securities, then you should be able to participate in them. I feel like that's one of the bigger issues. One, of course, the money, as we've talked about multiple times. Can you live without this? If for something was to go wrong, could you pay your bills and live without the money that you invested? But also that understanding is something that a lot of people don't know. And so if you work for a company that does this, you should be able to participate. So Aaron, what do you think some of the advantages and opportunities available to accredited investors are?
So basically, the biggest advantage is that you're able to invest in those unregistered private investment opportunities that are generally not available to the general public or your regular retail investors. These include things like private equity, venture capital, hedge funds, and other exclusive opportunities that you hear like that. And also your ability to invest in initial coin offerings, ICOs, and other high risk, high reward ventures. So your opportunities for investments just expand if you have that accredited status.
Awesome. Let's break down how the SEC accreditation guidelines like evolved.
Yeah.
So it's going to be a lot of dates and a lot of amendments. Let's just break that down for everybody so they can kind of see the progression and then where it might be going.
Yeah. So what I mentioned before in 1933, we have Reg D, and that defines the criteria for an accredited investor status. In 1974, the Securities Act amendments come about, and those expand the definition of accredited investor to include certain institutional investors, such as banks, insurance companies, registered investment companies, and employee benefits plans with assets exceeding a specific threshold.
Okay.
And then in 1980, we have the Small Business Investment Incentive Act, which includes certain small business investment companies, SBICs, and their investors. 1982, we have some Reg D amendments, and that modifies the criteria for accredited investor status, particularly with regards to certain categories of entities and the calculation of net worth. So we're just kind of seeing things kind of change a little bit.
Adding a little here,
Yeah.
taking a little out.
Exactly. 1993, Omnibus Budget Reconciliation Act amends the definition of accredited investor to exclude the value of an individual's primary residence, which you mentioned earlier before, from the calculation of net worth for purposes of determining accredited investor
Yeah.
status.
Now, don't forget they did that because this is when the housing market, you could basically say, "Hey, my house is worth $3 million," and then they're like, "Wait a second, it's not." And so now we're going to have to take that out. So we don't want that to go towards your net worth. That's why the main reason that they ended up taking that bad boy out, which kind of stinks because I mean, it's part of your purchases and your assets, but I fully understand because the housing market is always changing. And so that value of property could potentially change.
Yeah, and it's also not a super liquid asset
Yeah.
either. 2010, we have Dodd-Frank Wall Street Reform and Consumer Protection Act, and this directed the SEC to review the criteria for accredited investor status and consider whether to adjust the financial thresholds or expand the categories of qualifying individuals and entities. Now, nothing actually came about from this. Nothing was actually passed or changed due to this, but it did start to make people think about, okay, do we need to change the accredited investor requirements? What could we change about it? And that started to get the ball rolling for eventually in 2020. We had the SEC rule amendments, and that started to include the things that are included in the accreditation status today, which is including certain individuals with certain professional certifications or designations, such as that Series 7, 65, or 82 licenses that we mentioned earlier.
Again, if you can sell, you should be able to buy.
Yes, exactly. And individuals who are knowledgeable employees, that was added as well in 2020.
That's awesome. So as we look at the progression of the SEC guidelines, the future, I don't know if it looks bright or I feel like they're going to start including more people into that because according to the Brookings Institute, and this was in 2020, 13.85 of U.S. households qualified as accredited investors. When they rolled out these rules originally, only 1.8% actually qualified. So that is a significant jump.
Yeah.
Also, there's income to net worth thresholds established in 1982 have not been updated. So a millionaire then is definitely much more of a millionaire now, just due to inflation.
Yeah.
And so, there is some talk, and I've heard out in, the other blogs and videos that the SEC might actually adjust that net worth and how much you have to make a year, bumping it all the way up to about $645,000 a year. Now think about that, 2 years and the year you're investing, and then your net worth requirements being about $3.2 million. There was something funny that I heard, and I don't know how true it is, but if you're in New York, almost like 1 in 20 people is a millionaire as you walk down the street. We're just, as inflation goes, cost of living goes up, which means your income goes up.
Sure.
Doesn't necessarily mean that that's a good thing for investing.
Yeah. Yeah. Well, it's just that plain statistic that you just shared, which I think bears repeating, that in 1983, just 1.8 people were accredited investors, and that has jumped to 13.85%. So we've seen $1 million is not the same as it was in 1983. And we, of course, know that, but these rules don't reflect that.
So we'll definitely need to have some change in the near future. And then again, we just want to touch on what a non-accredited investor is. Again, it's anybody who doesn't meet that criteria of all those goodies, the 1 million, the 200, the licensing, all of us normal folk. That's what we fall into those. And then as the changes happen, how is that going to affect non-accredited investors moving forward?
So there's talk of the SEC broadening investment investment opportunities.
Those two.
We've seen this with Reg CF, which is regulation crowdfunding. So our unaccredited investors being able to participate in funds like crowdfunding. And there's also a discussion of a proposed rule to increase access to private markets. So we don't know at the moment how it will affect or what could potentially be happening. There's kind of talk of, as you said, it going both ways, either increasing your net worth and the amount of money that you need to make annually, which would decrease the amount of people who qualify as accredited investors, or it could go the other way where they continue to broaden the availability of accredited investors accessing these alternative investments.
Well, speaking as a poor person, I would really like them to broaden them so I can take advantage of these investments one day. But we do want to make sure that, there are risks and considerations when you are investing. And remember the importance, we talk about this all the time, research, making sure you understand the investment risk, doing your due diligence, asking the company to provide information for you, because you don't want to go into something if you don't fully know. Again, we've talked about this many, many a times. There is a chance that you might lose your full investment when you go in. And so you need to make sure that you are protecting yourself as well, that you can forego having that money for the period in which you invested for, but then maybe even altogether if for some reason that investment goes sideways. So let's just recap the key points of today that we talked about. So there's a clear distinction between accredited and non-accredited investors. We know about the net worth, the income, all that good jazz. And then, we want to make sure that if you want to hear more about non-accredited investors, investment opportunities, listen to us. Probably tell you wrong stuff, but we're trying. But no, listen to us. Listen to other podcasts. There's tons of videos out there. But we just want to really encourage our listeners to assess their own status and explore the suitability investment options.
Yeah, and we actually just did an entire podcast episode about non-accredited investors and some of the opportunities that might be available to them.
Yeah, so listen to that one. It's good.
Tune in. And you can hear a little bit more about that. So thank you so much for joining us for this episode of M2I Alternative Investments Chat. Next, we're going to be talking a little bit more about our accredited investors and some other categories that you might not have heard of.
There's more.
So stay tuned. Thanks for joining us. Stay tuned for more insight on our next episode. And don't forget to subscribe to continue the journey with M2I. See you next time.
The content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.